Benny, thank you for being a part of the beta program for ID, where we learn to invest with discipline.
Yeah.
And you've been one of the first, in fact, the first beta participants long
Yeah.
ago, maybe like
Yeah.
5, 6 years
Yeah.
ago.
19 onwards, I guess. Yeah.
So yeah, it's been a part of the journey right from inception. For our viewers, Benny, a quick introduction, and then your experience with investing, and finally, why did you decide to go with this join this beta program?
Yeah. So, hi everyone. My name is Benis Kumar Moses. I am a behavioral science consultant currently, but in my previous career, I was a head of sales for a mutual fund company. So, I have seen in the last 25 years, I've been part of the capital markets and stock market. I have seen many ups and downs, and there has been time when I had to bring police to my office to control the crowd because they all wanted to invest in my fund. And then there were times when more than 80, 90 days, there is not even a single application form, right? So I used to think that, okay, when there is a discount in a store, people rush in. But if there is discount in the stock market, people rush out, right? They'll all run away. If the market falls, say 25% from now, people generally panic. So I used to be very intrigued by the fact that why do people behave this way? And the beauty is the experienced person also falls for it. A person with 20 years stock market experience also falls for or succumbs to the panic. So that is when I actually had a opportunity to shift my career where I was actually studying human decision making. And a lot of answers came from that science, part of that science, why humans behave the way they do. So that was great. And it was like very exciting. This was in 2009, 10, when we started reading about these books like predictably irrational, nudge, or
Fast.
thinking fast and slow. All of these books. It was like fantastic, and we said, finally we get it. But unfortunately, that still never actually helped the investor, right? Because there is no way to combine all your knowledge and then convert that into a small process for people to follow. And when you came to me with this idea in the year 2000, I think 18, 19, when you said that I am actually planning to formalize this or give it a proper structure so that the sensitive or emotional human is not there at the wheels when the markets are going up and down, whereas that will be automated so that it can be a much better optimized way of what to say, executing your trades and maintaining discipline. And whatever happens outside the market hours. Your target, your triggers, your purchase points, all of it is getting decided outside. And then during the market hours, you are actually out of the market. That thing appealed to me. So one of the main reason why I became a big proponent of the bugs program is because it helps ordinary human beings to achieve extraordinary discipline. So that was one of the attraction for me with the bugs program.
Absolutely. So yeah, for users, Benny and I, we go all the way up to 2017-18 when we started discussing the behavioral
Yes.
impact of decision making or decision making on financial investments and the common pitfalls. Even seasoned investors and you students of behavioral science, like everyone makes those mistakes.
Yeah.
So figuring out a way to help us, in our own investment journey initially there was no plan to build a product per se,
Yeah.
but just to improve our own behaviors in the market, and then slowly, steadily it takes some shape.
Yeah.
So yeah, it's been a fantastic journey all these years. Benny, if you can also tell us a bit about your experience on the equity market,
Yeah.
your experience with ID per se. So
Yeah.
how has ID helped you in your financial decision making?
So earlier I used to be, so my financial literacy started quite early by luck because the first company which I interned after my MBA was Sundaram Mutual Fund. So what happens is being in a mutual fund, and that too, this was like 26 years ago, 1999 or 1998 when I did the summer internship there. That was like very early days of mutual fund industry itself. Luckily, as soon as I got out of college by say 23 or so, I have been exposed to this industry. From that time onwards, what I used to believe in is that obviously the regular things like rupee cost averaging or SIP. You keep investing little amount over a long period of time, hold time in the market rather than timing the market. All those things I fully ingrained. But many a times I have seen the markets, what to say, my portfolio going up to a certain level and then falling drastically. Of course, yes, it is very painful to hold on to at that point in time. Then again, the portfolio raises going down. I used to always think that is there any way to take advantage? Yes, I am a long-term investor. Yes, all my holdings are for long term. But is there any way that since I know that this is going to go up eventually, is there a way I can actually take advantage of the volatility in these stocks? And especially my experience was very much in mid cap and small caps, where the volatility used to be even higher. Of course, in India, Indian stock market or Indian market conditions, even the capital market itself is very volatile. But especially more volatility you can experience in mid cap and small cap.
Small
And
caps.
that is exactly the point where I decided that it is a very good point actually to start this journey. And that is where ID helped me in actually giving a structure to my thoughts. Like, for example, if I want to take advantage of a stock which is running up unnecessarily and then it's going to fall a few weeks down the line, ID gave me the structure for me to execute that plan, right? So that structured way of executing this, what is a plan of taking advantage of volatility, that is my biggest, what is a output. Actually, of course, it enhances returns a few hundred bips, 200, 300 bips, it can improve return. But most importantly, it gives me a outlet for my, what is a uh, patience to get converted into little bit better returns. So yes, I
Yes.
am a patient investor, but a general buy and hold investor will never take advantage of these volatility. And this volatility is given. I mean, anybody who knows stock market knows that stock market is always volatile. Like in my 25 years experience in stock market, I have seen at least six big falls, right from the dot-com burst, and then September 11 happened, and then what to say, 2004, 2007, I mean 2008. Lot of crisis keeps happening, and then there is a boom time, there is a bust time, but there is no way you can take advantage of it in a systematic way. And that is where ID helps me in my portfolio. And also, no, one thing I like about the way ID does it is that actually it reduces, because the profits are getting plowed back, it reduces my acquisition cost of a stock over a period of time. And that actually brings up what Warren Buffett always used to call that what is the moat of a business? And then there is what is your personal moat, which is at what price did you acquire the share?
The,
But if you buy it at a very high price, it doesn't give you that kind of a return. So ID structure systematically is able to reduce the acquisition cost over a long period of time, making the profit margins, what to say, much more bigger when you eventually get out of it.
increases the margin of safety because
Yes,
of the lowering of the cost.
yes. And second thing which I have noticed for me personally, as the acquisition price goes down, the pressure or the emotional balance which we normally go through, like for example, imagine if I have bought a stock at say 100 and then the stock is at 170 and then it has come down to 120. By this volatility, ID would have reduced my acquisition cost to say 65 or something. So by the time my stock has come back to say 100, the margin is already quite enough for me to maintain my calm and cool. The panic, it actually reduces because the margin of safety has increased because of the lowering acquisition cost. So what I believe, and I have also experienced it in some of my stocks, is that over a period of time, the cost of acquisition of a stock keeps going down. And that helps me stick to my plans much better. And it makes it a much more pleasant journey. The volatility it makes ID makes the journey, say a 5 year, 8 year kind of a journey, much more pleasant and much more what to say stress free. So that is something which I want to highlight. This behavioral aspect which ID brings in, that it can actually help you manage your portfolio with much less stress than the regular portfolio.
Absolutely. Yeah, I think you already answered my next question, which was so one of the parts of investing is the maths behind it,
Yeah,
getting your returns and the cost of acquisition and the IRRs and the alpha, those sort of things.
yeah.
That's one. Obviously, without that piece, it doesn't make sense. Anything wouldn't make sense. The other, if you would like to elaborate upon the other aspect of investing, the behavioral piece.
Yeah, so this I would give a small anecdote that typically what I heard is samurais do is that before they go into battle, I believe they take care of all their outstanding affairs. Like
Right.
in case if they don't make it in the battle, so who will inherit what will his son have, what will his relatives have, all of these things, so that when they are in the battleground, they are like tension and stress free. What ID actually gives with respect to a stock level is a plan which can actually give you saying that yes, if the market goes up, we are all happy, everybody, that's the best case scenario. But what happens if the market goes down? What happens when there is huge volatility? And the beauty is 70 to 80% of the time in stock market, volatility is given. For this big chunk of volatility, we never had a plan. As an investor, many people never had a plan. And ID was the only what do you say, instrument which I have used in my 25 years, which gives me a plan to tackle volatility. I had never come across because the rest of it, like a general advice or investment advice, everything falls on how you manage it is your job. How do you manage your emotions is your job, right? Whether it is Warren Buffett or it is anybody else, they say, okay, I can tell you what is happening and you have to manage your emotions on your own. But ID was the first instrument, in my experience, which gave me control over, or at least it gave me a plan of how to handle volatility. That is a big plus. In fact, as people experience, that is when people will have their eureka moment. Aha, this is the first time they can see a system which actually books profit. And then when the volatility goes up and then the stocks go down, it can even buy it back, right? That disciplined effort, which you see it in action, no, gives you a immense, what's a peace of mind, saying that yes, there is a structure around me which is taking care of my, say, stocks during volatility. So this is basically ID. I would rebrand ID as a answer to the market volatility. So yeah, so that is what is my biggest, what to say, takeaway from using ID. Can go up and down and
But
the ID will respond, yes, immediately. So that is where the real power lies.
absolutely. Benny, I think you mentioned a very important point. There's tons of literature on the best case scenario for a rising market or the stock
Yes,
that you're investing in. And then there are cases where even the plan for a falling stock by cost averaging. So there are certain, at least literatures and theories to it. What you rightly mentioned is for the sideways market, which does not
yes,
seem to be going anywhere, neither up, neither down, but just oscillating around a point. In my experience, 90%, 95% of the of a given stock, the journey is somewhere in between.
sideways,
So bulk of the time, a stock spends in sideways movements, and
yes,
and in fact, there is tons of literature which says the if you just do not participate in the top 20 days, not 20 percentage,
yes,
and just top 20 days of the
20 days,
market in the last 20 years, you would have lost something close to 80% of your growth. So
yep,
people are prepared for that, but then the 99.99% of the time where it spends in the oscillating phase
yes.
is you're actually the area where it sort of outshines and builds up its space.
Absolutely, because that is exactly where there is no plan, and in all the literature, maybe some big traders would have had some sort of what is a solutions for themselves. Most of these trading solutions are not for mass or large scale
Massive customers.
retail individual investor. So one of the things which ID has developed over the last 6 years is that ability to scale this solution across what to say individual investors as well as to mass scale of investors. So that is a big plus. It gives you a plan to tackle 70-80% of the market.
So, any one particular thing, Benny, that comes to your mind that stands out, for ID? Anything, if you had to pick up one?
See, one thing which what to say, because I have used the ID in a previous form in India, what to say, one thing is that simplicity of handling it. It is like I personally feel it is like riding a cycle. The first few times you might struggle because there are a lot of information ID actually provides on that screen. But once you are, what to say, once your eye gets in, and then once you start getting what to say accustomed to how do you operate and move around, then it is like a cycle, riding a cycle, right? Because you'll non-consciously ride this, and then you will start actually enjoying the patterns and this thing without getting pressurized. Like if you are a person who watches the stock market daily from morning, say 9:55 to 3:30, you will come out as a wreck by the end of the day. But here you can actually see ID's reports at the end of the day, and you can just breeze through it in just 5 minutes. Okay, and then you can take action, whatever what to say it is asking you to do or recommend. That is so. What we have done, the biggest highlight is what I first initially told you, that there are so many variables which has been compressed into a simple structured mechanism for a retail customer or an individual investor to take advantage of. That I think is the biggest strength of ID personally. Apart from the behavior, apart from increasing the moat, apart from reducing the cost of acquisition, helping up with time correction. But the most important thing is it has to be usable. So when I studied MBA, one of these marketing professors has told us, which is the best soap in India? Okay, so people were saying, don't know, I mean, which is the best quality soap, right? And then he asked the second question, which is the largest selling soap? And that time it used to be Lux. So we all said, it is Lux. He says, but a good quality soap would be something, what do you say, Ayurvedic a doctor must be making at his home, right? That is the best quality soap. But unfortunately, that is not accessible or scalable to majority of people. And that conundrum, that quality versus scale, right? I think that is what ID has cracked. So now all we need to do is to scale it. Okay, so yes, it is not easy. It is not this thing, but it is in a form which is in a scalable form. There are many complicated, what do you say, investment plans, investment philosophies, investment devices. There are many complicated, like dime a dozen. But what ID has done is it's made it very simple, very easy to consume, and in a scalable format so that it can be. So now we can actually supply the quality soap to millions and millions of people. So that is what is a standout thing for me. May it make ID accessible for general public. You will become an emotional wreck after watching the market from say 10 o'clock to 3:30, especially when your skin in the game, then your entire portfolio is out on the line. You will actually reduce the emotional utility of your investment journey. That is, it will be a very painful journey if you keep watching the market every day. Yeah, dramatically. And also, no, as I was telling you, it gives you a plan. So you are rest assured, like that samurai, no, everything is taken care of at the background, right? So that is what is the biggest advantage. And this would be what do you say, a blessing for clients who are actually, would say, directly in the market.
Any one thing, Benny, you think would make life easier? So, anything you find missing in ID? Anything that
Yeah.
comes top of your mind
So,
that will improve?
yes, the one thing which I would want ID to do, if it can actually point out the gap between the recommended price and the current acquisition price, right? Current average acquisition price, no? That actually gives a lot of emotional happiness or a utility to people. I think that will actually, in a single screen, they will be, or a single line or a single column, they will be able to quickly see, okay, I have 7, 10 stocks, which was recommended at this rate. And due to ID, this is actually my acquisition cost from that day to now. My acquisition cost is only this much, right? So if it is a point, that comparison is what I think ID should bring out as a user experience. As a person who has worked in the user experience in the last 6 7 years, I think this particular information is what will make people so happy, and then it will start giving you good word of mouth, because this gives a very very pleasant experience, saying that even if an expert is recommending it at say 100 rupees, and because I went the I allocated my ARC through ID, and it has actually reduced it to 65 70 rupees, the cost of acquisition. That would be a great data point. So I think whenever a person is putting it on a watch list, the recommended price, I think we are capturing it.
It is there
Recommended price
already
is
there.
getting
Yeah, it's there.
captured.
Right.
So I think we need to use a design to show it side by side. That will be
Mhm.
a great, what to say, pleasure point for people to just go through that and see, oh my God, I have reduced the rate. The volatility is so persistent or pertinent compared to in markets. It's so volatile. I mean, so even a big blue chip like ITC is undergoing so much volatility in Indian markets. So that actually proves the point for ID's requirement for every investor.
Absolutely. Even the large caps, at least in the last couple of years, have been going through this roller coaster. Yeah.
Absolutely.
And you've been in the stock market, equity market for the last 25
Yes.
plus years in some way or the other.
Yeah.
So you've seen it. I mean, in India, you've seen the this the liberalization of the stock market. You've been a part of it.
Yeah.
So what would you tell yourself or somebody who's just starting? So maybe yourself, starting 20 years ago. So if you had to advise yourself or somebody who's sitting on the sidelines and planning to get into the stock market.
So what I would say is that the party is just starting. So I feel very old for saying this, because what do you say? Because 25 years ago when we started, we were in a, what do you say? It's a completely different India what you were looking for. Now, what to say? The way the demographic dividend is going to play out. Okay, I'm not talking about India, what to say, landing on the moon and things like that. Just by providing roads, water, electricity, basic amenities, the growth which can be unleashed in India is tremendous. I mean, tremendous is not the word. And anybody who's sitting on the sidelines saying that, okay, should I invest in India? But if you want to actually ride a very steady secular bull run, I would suggest people to start seriously considering India and Indian equity investments. But the point is, every asset class Indians used to bank and believe has disappointed them, except equities. So people are actually coming to equities currently. But what I am actually saying is that the India's growth story is just getting started. So I used to, what is it, when the stock market is 8,000 points, BSE, I am saying, say October 2008,
Mhm.
it was around 8,000, 9,000 points. That time somebody told me that this will hit 1 lakh. Now, no, we are close to that 100,000. So, what I am now saying is, yes, you should aim for 200,000. And I personally feel that in the next 15 to 20 years, in our own lifetime, we will see that 200,000 in BSE.
The runway is huge.
Runway is huge, and also there will be structural what to say, reforms which will come through. The governments will soon realize they won't be able to take care of people's retirement. They have to give it to the people to take care of themselves. And when those institutional chunks of money starts moving, it is going to be a much secular bull run. So anybody who's sitting on the sidelines, I would definitely ask them to start considering India very seriously. The whole world, that is when the real power of ID will come through, because this volatility is very surprisingly everywhere in the world, it is volatile, right? I mean, that as I was telling you earlier, in a long period of time, say 10 years, 15 years, 70 80% of the market is basically in sideways market, right?
Yeah,
So, and the whole world actually requires a structured way to tackle that. I think
absolutely.
what do you say? We should take this very, very soon. We should take it
Hmm.
to the global level much
Yeah.
more sooner. So that is, of course, I would be a personal beneficiary also in that. But I am also saying that should be our aim. So once you start scaling
So,
in India, the next challenge is to take it to the globe. Yeah.
so one thing when I discuss with people is, the entire concept of risk in the stock market is
Hmm.
volatility. So, when
Yeah.
people discuss about risk, they'll say, okay, this stock is risky or this asset class is risky. Why is it risky? Because, one day it can go up 10% in one day,
Yes.
negative 10, 20%, and so on. So, entire definition of risk in the stock market is the volatility or sigma, so to speak,
Yeah.
the SD standard deviation. You know. Uh, what ID does is flips that entire story. So, what is considered to be a risk in the stock market? Obviously, the
Yeah.
underlying assumption is the stock that you have invested in or the asset you have invested in is fundamentally has some fundamental backing. The
Yeah.
underlying, doesn't become zero. So,
Yes.
obviously, ID would not be a great candidate for crypto, so to speak. But anything which has fundamentally underlying value, the more volatile, the better ID works on that.
Yes.
So the
Absolutely.
entire definition of risk in the stock market actually becomes for an ID, it becomes an asset.
Yeah. Absolutely. So it actually inverts the what to say, the weakest point in stock market investing. ID
Yeah.
converts that into a big strength. Yeah, that is the strongest point in ID. Yeah,
Thank you, Benny, so much for taking
thank
out
you.
the time. We'll stay in touch.
Absolutely. Yeah, it's a pleasure, and I wish all the ID users a very, what to say, prosperous journey with ID. Thank you.